Quite often, when markets go from too much of one thing to too much of another, they go from too much of one thing to too much of the other thing too. That looks like where silver is now. People who keep saying, sell it, take your profits. It's going to go back to $50. It's got to go back to this old high here or there or whatever. And then, about a week ago, we dropped 15% in sobriety in about 2.5 days. After a few days, you're back to being high. Why do they do that? They should know that this isn't a normal progress, right? You no longer get these changes for multiple months. They are now measured in days. And to be honest, we expect silver to hit at least 200. I wouldn't be surprised if it got close to 500 though. And there are other factors at play that we could talk about if you want to. There are no longer any signs that silver is in a bull market. And that's the exact sign that a lot of buyers are missing. Markets often go too far in the opposite way when they unwind from one extreme. And it looks like silver is now in that phase of speeding up. Recently, there have been intense sell-offs that lasted only a few days and then went back up quickly. When prices move in that way, it means that underlying demand is stronger than attempts to keep the market from rising. This points to a structural shift instead of a short-term rise. Michael Oliver, a momentum and technical analyst with a lot of experience, has said that this is not a normal gain. He thinks that thinking that silver will go back to old highs doesn't take into account how momentum-driven trends change over time. His lowest goal is close to $200, but he has made it clear that a move toward $500 would not be surprising if things keep going the way they are and stress in the banking system grows. Now, here are some clips from the talk with Michael Oliver. Before we go any further, please subscribe to our channel and click the bell button to get updates when they happen. Thanks, and have fun with the movie. Don't think that what's happening with silver will ever be normal again. When most technical analysts look at a market, they look back at the last couple of years and look for patterns like overbought, oversold, swing objectives, and other similar things. They are still living in that world with silver. I believe they are going wrong. Using silver as money. Don't forget that it's money. Silver is like surfing on two waves, not just one. The most important one is how silver and gold are used as money. That's the main thing that makes those metals' asset values different. But silver is also used in a lot of different industries. These industries are growing quickly because of the need for silver in high-tech areas like data centers, computers, solar panels, and so on. It's demand that is higher than supply, and it has been for 5 years. It keeps going up, which means the gap grows. Because of that, it has a real problem. That's the other wave that most people are paying attention to. The desire for silver because of this, that, and the other thing. They forget that it's money and that it's generally been worth a lot less than its mother metal, gold. Also, this is one of the levels that set off the last 8 weeks of silver's action. I'll tell you what it is. With gold, silver goes up and down. It has worth that goes up and down, and you can draw a chart of it. And our way is a little different. It's not something we do. We figure it out. We split an ounce of silver into an ounce of gold to get a percent. In the past 50 years, say to 1975, you could plot what the best reading was for silver compared to gold at the end of each month. What was the peak relative performance reading? We plan it too. Okay, indeed, during the silver bull market from 1979 to 1980, the price was still within that range, which was between $4 and $50. In 1979 and 1980, there was a big rise in the price of silver and gold. In the last 5 months of that bull market, silver went up 4.5 times, hitting $50 for the first time in 1980. Okay, what caused the silver bull trend that was already going strong to go off the charts and dramatically change the course of events that no one saw coming? Okay, silver and gold had been going up again for years by 2010 and 2011. It was a layered type of progress, which was frustrating for the bulls, but still up, up, up. Then all of a sudden, from September 2010 to April 2011, or 6 or 7 months, the price of silver doubled. In September 2010, it was in the 20s, and all of a sudden it went back up to 50. It did this for years. It went crazy again in the last couple of quarters, stopping at the top of the old range that used to be 50 years and is now 100 years. What made that bomb go off? Shouldn't it have gone up to those high points the same way it had been going up? What made it go crazy? If you look at the difference between silver and gold at that time, you'll see what looks like a ceiling. I'm now talking about details. The difference B was plotted on that spread chart every month. During that bull market for silver and gold, silver just couldn't get above a certain level compared to gold. Suddenly, it popped above that level, which would have been in the summer of 2000 or 1979. When it did, the price of silver went crazy, quadrupling in half in 5 months. By September 2010, it was already going up in price and was in the 20s. Also, that spread went through a ceiling that anyone who draws charts could see if they did it the way we do. And bam, it doubled in 7 months. Everything was the same this time, but the spread chart made it even more clear. Even a bigger base that goes from silver to gold over 10 years. From silver to gold. It was impossible to get above that number or that percent, and the end of November broke out above it. All of a sudden, silver goes crazy. During those few times when a market stays in the same band for years or even decades, we see that length of time in many other markets. Copper did something like this. In the 1970s, 1980s, and 1990s, it was between 50 CIs and 150 until 2005. It went above that range in the last quarter of 2005, and in just a few quarters went from $4.50 to $450 on its own. It wasn't linked to other based metals, for instance. It did it by itself, had nothing to do with what gold and silver were doing. After 15 months, lead did the same thing. You could draw a lead chart from many years ago, and it would still be true to that time. When it broke through that in a few quarters, the price dropped by 4 times. All of them were squished into a couple of quarters. Again, it had nothing to do with the copper move by itself. So, we've seen these kinds of things happen in other markets where prices have been the same for so long that you can't believe it. It's getting old to you. You believe that living forever is the truth. It doesn't. And when the market adjusts to a new reality, it does so quickly and in an exaggerated way. We see bubble tops in the stock market, for example, and a lot of people think, gee, I should have known that. And sure enough, the crash that followed was pretty dramatic. Exactly the same as the 2002 low. In 2 years, the NASDAQ 100 fell 82%, which burst the dot-com bubble. Okay, 2007 to 2009 process of the same kind. Still, the point is that when a market has done something wrong, either too much on the upside or too much on the downside, as in this case with silver being stuck in a 50-year range when every other market in the world, copper, lead, and gold, were not stuck in that range. Copper prices ranged from 50 CNOTs to 150. The 450 floor is where it lives. It's now about 5 o'clock, almost 6. That's when you stay in that range. For some reason, silver stayed in that range for 50 years, while copper broke out of its range in 2005, and lead did the same in 2007. And each time gold went up in price, it was much higher than the previous high. It was 850 in 1980, then 1920, and now it's 4,000, etc. So why did silver get inside? What's going on? It messed up. Now, it's possible that it was a forced mistake, or even manipulation, and we know that some banks may have been working with central banks to play a game to try to keep the capital rate low for some reason. In the end, that didn't work. But when silver goes off like it is now, I think you'll see a huge move that will blow your mind in the next couple of quarters since that spread breakout. It's not going to happen in steps. You're going to a new reality, and it wouldn't surprise me if it was in the several $100s range. For example, Eric Spratt said that if you deflate silver or adjust it to the growth of money, it would probably be $200, which would be about the same as the old highs when you take into account the amount of money that exists and how quickly it is losing value. So, let's say that's a new normal, a new reality that makes sense. When markets go from too much of one thing to too much of another, they often go too much of the other thing on their way to the new reality. That looks like where silver is now. There are people who say all the time, sell it, take your profits, it's going to go back to $50. It's got to go back to this old high here or there or whatever. But then, about a week ago, silver dropped 15% in just 2.5 days. After a few days, you're back to being high. Why do they do that? They should know that this isn't a normal progress, right? You no longer get these changes for multiple months. Now we measure them in days. We honestly think that silver will hit at least 200, but I wouldn't be surprised if it went higher. If it gets close to 500, though, tell the truth. There are also some other things that come into play in that case that we could talk about if you'd like. Silver's price doesn't follow the same old rules as it used to, and many experts are getting lost by treating it like it does. This market is moving from a phase of multi-dead containment to a new price reality that is being driven by both money and constant industry demand. A lot of people have forgotten that silver can be used as money, even though its supply shortage is getting worse because of its huge demand in solar data centers and new technologies. In the past, when silver comes out from below gold after long periods of compression, the move is not slow. It speeds up very quickly, cutting years of price finding into months. When similar breakouts happened in copper and lead, prices dropped sharply after long-standing limits were broken. Silver has now done the same thing, which means that slow pullbacks are being replaced by short, sharp corrections. Expectations based on past numbers are becoming less useful. We need to go back to the interview. We see that there is a gap between supply and demand. That's been ours for 5 years. What's the holdup with silver? Well, forces that have been building up. Yes, China's continuing need for their solar panels is very important. They make up about 80% to 90% of the world's solar panels, and silver is an important part of that. There's also this AI data center, power center, and other stuff that we hear a lot about. Well, silver is important in that, there, and everywhere, both in small and big amounts. You can't get rid of it. It's necessary because of the way the metal is made. This means that the forces that affect demand are still growing, and the price of silver hasn't taken this into account. So, if it made a mistake by not already responding to that, by growing slowly to meet the ongoing demand, which it hasn't done, it does it very quickly when it catches up. And actually, it makes sense because it gets from A to B, which is where it should have been 10 to 20 years ago, and it does it quickly. Copper, lead, and gold all did this during bull markets. You know what's interesting about gold right now? It's not mostly used in industry, it's mostly used as money. The bull market has been going on for the last 50 years, ever since the government made it legal. It reached its highest point in 2000 and then dropped to 1975, when it became legal. As soon as it became legal, the price went through the roof. By the middle of 1976, it had dropped to 103s. It fell 50%, which was a bare low. In 3.5 years, it went from a low point of 103 in 76 to 850. Okay, 8-fold gain bare low, bulge high. Then it went sideways for many years, but it stayed around the $200 to $400 mark. It's not quite $850 yet, but it's still a long way above what it used to be. That was the case in the 1970s and other times. It hit a low point of about $260 in 2001. After 10 years, it was $1920, another 8-fold move from bear low to bull high in conditions that aren't even close to what gold is really like right now. Okay, this time gold's all-time low was $1.50 in 2015. 8-fold says that number is around 8,500. Okay, we're 4,500. We only have 4 moves left. We're only half as big as the last 2 boom markets. Is it possible that gold will do it again? An 8-fold move wouldn't be a big surprise. Okay, no big deal. Oh, wow. Now let's say silver runs up to, say, 2% of an ounce of gold. Where would silver be? Oh my gosh. What would that be? 8,000 gold, or 2%. You get it. What if gold doesn't stop moving 8 times as fast as it did before? This time there is something different going on. And what if silver didn't go where it has been for the last 50 years? That has been the case at least 20 times in the last 50 years. At least 2% of the silver should be turned into gold. This year, the lowest it got was about 1%. Dirt cheap silver that isn't even gold. Okay, if silver doesn't just go back to 2%, which is what it did during the bull markets for 20 of the last 50 years, then I'll be okay with that. In 1979 and 1980, that spread link was 6 to 12%. Or from 2010 to 2011, it went up to over 3%. What a difference that makes from where it is now. Okay, what about 3% or 6% of the price of $8,000 worth of gold instead? Let's say gold only does what it's supposed to do. That's what happened during the last two bull markets. The market is going up right now. The spread should go up, so why shouldn't it? It should at least try to match the spread relationship it had in 1980, 2011. Prices even higher than those highs. Why shouldn't the spread relationship go up and try to beat those highs? So the limits are taken off of silver, both in terms of its relationship to gold and its own technical state. So it's a monster, and you'll miss the move if you don't treat it that way. You might also think that RSI is too much. In fact, if you look at the famous monthly RSI metric, which is called momentum, we don't use it, but a lot of people do. RSI went above 80% every month during the 79-80 range, which is the overbought number for a year. If you sold when it reached 80%, you missed the whole move from the teens to 50. Okay? You missed the whole move, so get rid of your rules. Things are not normal for us right now. That's what we think. Also, we will be more careful about locking in positions, especially those with a lot of leverage or call options, if we get what we expect in the next 6 months. I don't think silver will ever drop in price again. If it goes from, say, $250 to $400 in 6 months, it could fall back to $250. Even though it will fall apart, things will not return to the way they were. It's going. The numbers are going to be much higher. I think you'll miss it if you're not there in 6 months. There is no contradiction in silver's slow reaction to a supply deficit that has been going on for years. It is the release of pressure that has been held very tight. There has been a quiet rise in industrial demand for solar AI technology and electricity, while markets stuck in old ways of valuing things have ignored silver's role as money. When the price finally goes up after being too low for years, it doesn't go up little by little. It speeds up. History has shown that metals that get stuck in man-made ranges finally refract violently, not because markets become crazy, but because they are fixing mistakes that have been around for a long time all at once. The price of silver compared to gold is now breaking through ceilings that have been in place for decades. This means that old technical signals no longer apply to this valuation system. This isn't a normal bull phase, it's a restart of the structure. Leave a comment below with what you think about his opinion. If you learned something from this video, please support us and turn on alerts to find out about our new videos. See you in the next movie. Thanks for seeing.